So if I talk about my fund, it's been going for going for a year. Its birthday is 21st of June, so tomorrow I'll be 1 year old. It's a £1.9 million pilot fund, which is specifically looking at commercial creative sector and the development of content in the northeast of England on the one hand, and on the other hand, any other business that requires creative content or creative services. So I could invest in an engineering company that wants to develop a whole new product methodology or product range or an approach. So I work with creative services companies and I work with creative IP owning companies as well. All of these public funds are very much about jobs created. They're very much about businesses supported and all of that. So that's where my stakeholders, One North East and the European Council, where this sort of money comes from, is looking for impact rather than a return on investment. So that's something worth knowing. In the North East, there are a proof of concept fund which is very early stage, really research into a technology. It works at that space. There's also a co-investment fund which is working up to about 1.5 million. And for those of you that are looking to raise larger sums of money, it's worth noting that you can work with public sector to, for example, get them to put up £500,000 that you then match with either angel investment or institutional investment. And that can be a huge help. For those that invest at the lower stage, which is pure public sector investment, there's something called state aid, and I just need to run this by you because it's the limitation of €200,000. You're not allowed to put more than €200,000 of public finance into a company. Otherwise, you come up against the European Commission, who says that you're then subsidising that company, and you get unfair competition. So all of these very early stage funds will be saying there's a limit of €200,000. If you invest it as a co-investment fund, that limit goes out because you're investing it on a commercial basis. What is quite exciting currently is the fact that the euro is very strong and the pound is very weak. So I am investing up to £150,000 in a company of pure public sector finance, and we go up to about £350,000, £400,000 when we're co-investing and pulling pots of money together. And that means we can, I mean, that's a very healthy first round for a company who are trying to develop content. And that makes an exciting place to be, yeah. Yeah. Unfortunately, the one in the Northeast Proof of Concept Fund only operates up to 60,000 because the state aid rules were changed last year, and that was set up in 2003 and had to operate under the previous state aid rules. Yeah, pounds. So it's €100,000. So it's 60 to 75,000 pounds. There was another question. Very difficult to say, and actually we sidestep that very neatly because there is a whole issue around valuation. And pre-revenue, early stage companies you can't value. What we do is we retain the right to convert that at a later stage when you get a second round of investment, and we will do it proportionate to that second round of investment. So if you then go out to the market and they say the valuation of your company is X, so 150,000 is worth 5%. Yeah. But it's set by third-party investor. It's not set by us. And I think that that's a... Sorry? No, because we go through 3 stages when you're convertible loan. You go in as a convertible loan, then you need to convert, then you need to exit. So that's an indication of how early we go in. Okay. It's not for everybody, this sort of finance. For some people, it's not big enough. For some people, I think the key first question that I start talking about when somebody comes into my office is, do you want to give up some of your company? Because essentially, I'm buying some of your company. You're going to be working with me for a long time until you get somebody else to buy some of your company. And not all entrepreneurs want to go down that route, and that's absolutely fine. I just need to find the entrepreneurs that do want to go down that route. This is just kind of gives you a sense of size of different parts of this continuum of finance. So if you look at mainstream venture capital at being 3 million plus, we look at early stage being 400 to 3 million, something in there. Seed being a little bit earlier, 200,000 to 400. And then this sort of, my fund sits in the 50 to 150,000, or if we package it up a bit more than that. It gives you a sense that probably the seed and early stage, you're looking at private investors wanting to come in there, angel funds or angel networks. The mainstream VC funds will not come down lower than that. And I don't know if you know, but last March, 3i, which was renowned for being and set up specifically to invest in early stage companies, has withdrawn entirely from the early stage market because they can't make any money from it. And it's as simple as that. This early space is incredibly high risk. And it just needs to understand that. So I just wanted to talk a little bit about, we talked, sorry, I don't know your name, but you asked a question about why would you need certain amounts of money. And it all comes down to what you want to do with your company and what you want to do with the business. And we've been working on this model over a long period of time. You know, I think it shows a progression that creative entrepreneurs probably really understand, starting with a freelance and then suddenly realizing that actually if you get together 2 or 3 of you working on a specific skill base, you become this sort of artisan company. It may be that it's 3 or 4 freelancers that come together to do projects and you're quite happy at that level. The next sort of level going up from that is where you suddenly realize that you can make a club out of this. You could actually build a lifestyle. You could earn some money. You could own something. But even at this sort of level 1, level 2, clubs aren't really businesses that are going to be able to be sold, because they tend to need work around the personalities within those clubs, and there aren't necessarily the structures, the key structures that are looking. So the next stage is really working with value creators, and there's a big leap between a club and a value creator. A value creator is somebody who knows that there are kind of 2 sides to a business. There's the expressive side and there's the functional side, and that you need to develop and nurture the functional side, which is your account management or your accountancy, your financial management, your financial controls, the marketing and sales activities. All of those need to be structured and put into place.